We are live now.
Woohoo! Hey
Hey.
everyone. Let's talk about the 2023 tax deadline. So, as many of you know, March 15th is right around the corner, and we're so excited to go over, the top things that you need to know or do as a business owner. And do we have a lot of people coming in, or are we um I don't
Well,
know.
a lot of people reserved to come to it,
Mhm.
so um we'll see. We'll see, hopefully.
Perfect.
I
So,
know that this is going to replay over and over too, so people will be able to get the
right.
message across.
Exactly. Perfect. So should we just go through it or?
Yeah.
Yeah. Okay. So again, hey everybody, Rachel Mikulov here. I'm a small business tax expert. We're going to go over the 2023 tax deadline and the top things that you need to do as a business owner. So who are we? I'm Rachel Mikulov. I'm the CEO and founder of Empire Tax Professionals, and I have Amanda Lynn Perez on this call as well, COO of Empire Tax Professionals. Amanda Lynn, you want to share an intro or a little bit about yourself? I think it's
Sure.
perfect.
Yeah, I've been with Rachel and Empire for a little over 5 years. I started in the front end of the office, and thanks, Jordan. And kind of grew within the company and gained a real sense of knowledge about the back end and just how to manage and um, kind of be able to get to understand how to diagnose a client's needs too. So I really work one on one with prospective clients or people who are interested in learning more about how we can help. And so, yeah, I work a lot with a lot of new clients who come in. That's what I do.
Perfect. I love it. And you do a lot of other things. So it's
Yes,
like
I
the
do a
mom
ton of things.
that
Yeah,
you can't even mention every little detail, but you're just such a important person in the company. And I'm so grateful for you, Amanda Lynn. So thank you for being
thank
with
you.
us for such a long time.
Thank you. You too, Rachel. I
Of course.
appreciate you too.
Of course. So here is what we do. We offer, bookkeeping services, payroll, tax planning, estimated tax payments, entity consultation. And the only reason why we mention this is because, Amanda Lynn and I, we speak to a lot of business owners who are really stressed out and they don't have all of this under one company. We speak to a business owner who has a bookkeeper or a bookkeeping company and they only get bookkeeping, and then an accountant who they just do the IRS and state compliance, and payroll, they just have, like, let's say Gusto or ADP just processing their payroll, but then they don't have anyone helping them with tax planning or estimated tax payments, and they have an unexpected tax bill at the end of the year, or even most importantly, an entity consultation. Nobody
Mhm.
tells them, hey, you should be an S corp or you should be a multi-member, LLC. They don't really go over that with them. The
Yeah.
bookkeeper focuses just on the books. Accountant focuses on what you go to them for. Payroll just focuses on payroll. And then tax planning, estimated tax payments, and entity consultation, most of the time business owners are lost and they don't even know who to go to. So I want business owners to really understand that we all offer this under one offer and one service. And if you need the help, reach out. We are here to help you. We are here to serve you. We're not selling anything. If you're good, we will tell you, hey, you have it great. Keep on doing what you're doing. I know that you've rejected a few clients that have everything perfect or they don't even need our services yet. So
Yeah, or I talk to people who have like who tell me like I'm really happy with my bookkeeper or my accountant or whatever it is, and sometimes you might need someone on the tax side that yes, of course, it's always good to have an all-inclusive service, right? That's a
like,
huge benefit because lots of accounting firms don't offer that. You either have someone who's actively on the books or you have someone who's actively doing
exactly.
some tax stuff. But to get them to work together and cohesively and understand that I'm taking care of you all year long, so I'm going to know if you had a new baby, if you invested, if you bought new property, whatever it is, and then having that understanding of who you are and having that relationship all year long and then producing your tax returns, which tax return is going to come out more accurate
Exactly.
or more strategically put together. So
That's
that's the
right.
biggest benefit. But I do have people who are really happy with their accounting person, their person that's on the books, and they've assisted them with making really, really good decisions on entity structure and things like that, and they have that long lasting relationship, but they're not the best in tax. And so I'm saying, go ahead, keep your bookkeeper, come to us for tax then. We can help you, or even do a tax plan once a year. So it really depends on what you've got going on. But yeah, it's something that I've heard over and over again. I've also spoken to people who say, I'm not opposed to getting rid of my bookkeeper if I can have a place that'll do it all in one.
Right. Yep, I heard that too. Especially if they're able to save money. And as an entrepreneur, I mean, we're just so busy that we don't want to talk to multiple people and then
Yeah.
communicate from like the bookkeeper to the payroll person. And then it's just annoying and it's a waste of time. And the bookkeeper thinks she's too high level to speak to the CPA. The CPA thinks the same thing. And it just doesn't serve the business owner, which what we want. We want to make sure the client is always compliant, has peace of mind, and saves thousands of dollars in taxes, which is the ultimate goal of hiring an accounting company.
Right. Agreed.
So awesome. That's perfect. And then here is just, a visual of what we do. We take care of your bookkeeping, tax planning, payroll, and more all in one place as one service. So today we're going to go over the upcoming tax deadlines, the top 3 things that business owners really need to do now to make sure that they're filing their corporate returns timely. And then we're going to go over some bonuses and share a story with you on why it's so important to have your books done timely and accurately and file timely as well. So when are the deadlines? The deadlines for small businesses, the sole proprietor deadline, which you file with your individual return, that is due April 17th this year. And if you file an extension on or before the deadline, your extension deadline would be October 16th. Partnerships is if you're a multi-member LLC or or if you file a 1065 return, your deadline is March 15th, which is 15 days away. And then your extension deadline, if you file an extension form on March 15th, your extension deadline is September 15th. Now, remember, guys, you need to get an approval. Your extension must be accepted by the IRS and state, and you don't have an extension to make a payment. You only have an extension to file, and it has to be accepted. So let's say if you converted your LLC to an S corp and the IRS does not recognize that S election, you should mail that S corp extension and make sure that was certified. So if the IRS says, "Hey, we never got your extension on March 15th," you have a certified receipt, you have documentation, proof that you
Right.
filed it timely, and the IRS will remove all and if any penalties because you mailed in an extension. You could file
Right.
an extension, online. You could file an extension on, by paper, but you want to make sure that you know the proper entity and you are mailing it to the right address.
Yeah.
S corps are March 15th, as a lot of you know, which is, we're getting really ready to make sure extensions and returns are done timely. And then the extension deadline for that is September 15th. And then C corps are due, that just changed a few years ago, by the way, but C corps are due April 17th. And then the extension deadline is October 16th. So knowing these deadlines are super important because if you don't file the extension for the multi-member LLC and the S corp and the partnerships, you will get, I think the penalty is $205 per partner per month. So if you don't file timely, you can get I think it's like $2,400 a year. I've seen penalties of like $8,000 because the corporation had multiple partners, and it gets really like really messy when you don't file timely, and you just always want to make sure that you file timely. I mean, there's something wrong with your camera.
Is there?
I don't know what
I'm
happened.
seeing my camera just fine. I'll stop and come back in.
I don't know what
Is that
happened.
better? We're still live. Did we lose Rachel? There she is. We lost you for a
I
second.
Oops. Okay, am I here? Do you see me?
You are here. We're still live.
Okay, perfect. I don't think I need to share my screen or yep,
You
let's
should
do
be able
this.
to still present the, yeah.
Mhm. Okay, perfect. Let's do. Sorry, I don't know what happened. Okay. Okay, so yeah, as I said before, so you really want to make sure that you file the extensions timely and you have documentation, email it to yourself, hold it because that is just like money. If the IRS ever sends a notice saying, "Oh, we never got your extension," you call the IRS, you share the documentation proving that you filed it timely, and they will remove those fines. So, top three things businesses need to do now to make sure they file their corporate returns timely. Number one is bookkeeping. So, when you're a corporation, you really want to make sure that you're getting all of your books timely and accurately. So, I speak to a lot of business owners. They think their bookkeeping is done accurately, but it isn't because
Mhm.
a lot of the bookkeepers that they hire that they think that are great are normally good admin people that are going to be excellent for sending out invoices or making out phone calls or calling people to verify their appointments and things like that. But you need to really understand what tax, what your what expenses are deductible in order for you to properly do bookkeeping. A lot of
Mhm.
bookkeepers really just allocate expenses to the proper IRS buckets, but you really want to make sure that your bookkeeping is done accurately. And you always want to make sure that an accountant reviews your bookkeeping before it gets filed before you prepare your returns. Always. It's like a must. And
Right.
a lot of
You're
times
taking you're
it doesn't
taking the books. Sorry, Rachel, I didn't mean to cut you off.
problem.
I just
No
think
problem.
that even as a business owner, it has to feel like you must be nervous, right? Because you don't know accounting. You're just running your business. So you have
Right.
your bookkeeper working on the books, and then you're giving the report that the bookkeeper gives you to a tax preparer and hoping and praying that everything is done properly so that you're not in trouble or getting a notice or whatever the case is. And I feel like
Exactly.
that's a really bad position to be in when you don't really know these things. So it's good to kind of understand at least the basics so that you can know what to look for. And we have another webinar on top questions to ask your accountant before you
Right.
hire them. You guys should check that out because it's super important to kind of make sure that they know what they're doing. Not all accountants know what they're doing.
That's right. That's right. And not all accountants will review your books. And I've seen it. I've seen a client years ago would come to me and he got an IRS notice. And I said, "Okay, did your accountant review your books?" And he goes, "No." And I said, "I'm really curious," because I was like in my learning stage years ago. And I
Right.
said, "I want to ask your accountant, why didn't they look at the books?" I was like really starting out. It was like 12 years ago, whatever. And he's like, "Okay, let me ask her." And she said to him, "You're the one that hired her. You should know who you hired." Like, what? Like, he's like, "You didn't hire me to review the books." And this is a very reputable firm in New York City. Okay.
See?
And I'm like, "Oh my God." I'm like, because she didn't review the books, the bookkeeper didn't reconcile everything until December 31st. So she, reconciled mid-December. And, sometimes statements end in the middle. So she's supposed to wait for
Yes.
the January statement. And I'm like,
Hmm.
"Oh my God, this is why you're getting audited." So it was just, it's just, I was like shocked. Some accountants or some people just want to do the minimum. They don't want to go above and beyond and help the client. And they really just do what they're paid to do. They don't think
Robotic.
out of the box. Right, exactly. They just say, "You paid me to prepare a return. That's all I'm going to do. I'm not going to ask you about your entity. I'm not going to ask you about how you're paying yourself, or I'm not going to ask you about who's really doing your books." They're not going to ask additional questions. They're just going to prepare their return. And this client owed thousands of dollars, got an IRS notice. He was in the construction industry and he was so stressed out. He would come to me with like a bunch of receipts, and it's just crazy. So when you have a bookkeeper, you want to make sure that your accountant reviews your books always.
Yep.
So if you're using QuickBooks Desktop, that's very old school. You don't want to use QuickBooks Desktop. You want to use QuickBooks Online, especially if you're making more than 150K a year. These are, the recommendations for business owners making 150K a year or 100K, or if you have
Mhm.
intentions of growing your company, then you do want to use and pay for QuickBooks Online. You want to make sure that you're
Right.
reconciling your bank account, credit card, if you have Stripe, PayPal every single month. Then you want to make sure your inventory is updated. If you have inventory, you really want to make sure that's updated monthly. And then you want to make sure that all of your expenses are categorized according to the IRS, categories. And then you never want to do your bookkeeping yourself. It pays in the long run to hire a bookkeeper or an accounting firm to do your bookkeeping. If you're making like less than $100,000, it does make sense for you to do your own bookkeeping because you want to know where your income is coming from, what your expenses are. And, and before you delegate something, you really want to know, what your numbers are. Um, but if you're making more than 100 and 150K, it's just easier for you to be on sales calls and focus on marketing and focus on the operations of your business so you can grow and scale your company. That's what we recommend. And then you want to hire accountants that specialize in your industry because we work with e-com sellers, we work with marketing agencies, and a lot of accountants, like local accountants, they're really used to working with the law firm up the block or the restaurant up the block, and they don't know, specific expenses that marketing agencies, e-com sellers, or any online seller has, like the day-to-day expenses such as Kajabi or ClickFunnels. And we have a funny story to share later. um, but they don't know, all these like online apps, and they may assume that it's personal. And we've seen accountants assume it's personal. So when you assume expenses are personal, your net income is much higher, and then you pay a higher tax. So you don't want that.
It's
Um,
like being a model. Like if you're a model and you have travel expenses and expenses for the hair and the makeup and the this and the that, the construction worker that comes to get bookkeeping done is not going to be able to deduct hair and makeup, but the model can. So you need to have an accountant who knows what is deductible based on your line of work and your industry, because the IRS does recognize that industries require different types of deductions, and you just have to know.
right.
It's all about the knowledge.
Yep, it actually has. There is an NAICS code on the return, and the IRS wants to know what code you qualify under, and then they look at the returns to see if it's normal and if it's like average based on other business owners, and they do look at that definitely. So you do want to make sure that you have you're deducting expenses based on your industry, and you need to know what you're able to deduct.
Right.
So number 7 is deposit all of your business income in one bank account, just so what your income is. Because if you deposit 5,000 here and 10,000 there, then your income is not going to be accurately calculated. And if it's a loan or a personal, you don't want to really put it in your business account because the IRS will assume that it is income, and you don't want to mix it. So you want to really keep it clean, and then pay all of your business expenses from your business account and or business credit card. So if you have, business expenses, try not to put it on your personal card, such as
Mhm.
Staples, because that could be a personal and business expense. If the IRS sees that you paid it from your personal account, they would assume that's a personal expense, especially if you paid it from your personal account. So all of your business transactions should really be from your business account, just to keep it clean and audit free. And you just want to really relieve a lot of your stress and not add additional stress. So keeping things simple will definitely help you.
Sarah's asking, what do you guys think of current tax law revisions, specifically the deductibles?
So we could go over that. I mean, there's a lot, like the Biden plan, and there's so many current revisions. Specifically with like expenses, we're going to go over that actually shortly. I think that's one of the slides here later here. Okay, so pay for all of your credit cards from your business account. We mentioned that. Keep track of your loans made to the business and where your income is coming from. Make sure to report your 1099 income. That's super important. We've actually seen a client get audited. I mean, he's not a client anymore because he just went out of business. But he is an e-com seller, didn't really do well, and he didn't do well, and he did report his like $200,000 of income. So it's just, you want to make sure that you're reporting your 1099K income on your return. And well, the 1099K form must be reported. And he got like, I think it was a $15,000 tax bill because it wasn't properly reported. And he was like, oh my God, I'm so stressed out. He was really panicking. And you want to make sure that all your 1099s are properly reported. So, good record keeping will help you pay less tax, avoid penalties and interest, and obviously reduce your stress a lot. It would help you file your returns timely and accurately because everything is going to be accurate. It would lower your chances of getting an IRS audit and will help you survive the audit if you ever get audited. It would monitor the progress of your business, which is super important. And I think the businesses that did really well in COVID had enough, funds, and they really did a lot of things. They had a lot of backup and cushion in order for them to be in business. So, that's how we were in business. We were able to look at our numbers every single month and know how to shift and pivot. So
Mhm.
you never know when these things hit, like, a product goes out of business or I don't know. There's things that always happen in a business, and you want to make sure that you're able to monitor the progress of your business every single month. And the best way to do that is really look at your profit and loss reports on a monthly basis. So it's super important to know your numbers, what's driving revenue, what are the expenses, what are the consistent expenses, and what can you do, to reduce your taxable income. Because if you reduce your taxable income, your taxes, and you're able to reinvest in other things. And understanding that entire picture can, change your decisions on a monthly basis. So
Yeah.
knowing that every single month is super important.
And I think that's where people get that's where they kind of get confused, because I feel like I hear a lot of people coming to us November, December, and they're like, "Well, what can I do to save my butt for this year before tax season comes?" And it's like, this is a yearly effort. Like we're working year round to strategize with people to come up with ways. And yeah, there are last minute things that you can implement, but that's not the smartest way to save the most. And
Exactly.
if you're really taking your finances seriously and really trying to grow the company and have real goals that you're working towards, then keeping on top of the books, like Rachel said, having the overall bird's eye view of everything that's happening in the business so that you can make decisions as a business owner to help you grow. So it's not
Exactly.
a last minute effort, it's a ongoing thing that you're working on constantly throughout the year.
100%. I recently, looked at my numbers and I said, wow, we're profitable. We could hire another employee, and we're hiring somebody starting in the next 2 weeks. But business owners have that too. Are you able to reinvest that money into marketing? I know
Mhm.
someone that invested $18,000 into Google ads, and they were able to, track their Google marketing, and they were able to get 115,000 of like leads and close deals because of
Wow.
that. And she knew her numbers, so she's able to say, hey, that's a huge ROI. Let me put more money into Google ads. Let me put
Mhm.
more money into Facebook ads, or let me hire another employee, or get another location. These things you're able to do by monitoring the progress and reviewing your financials on a monthly basis. And why would you want to do that at the end of the year? Why? It's like, let's wait until the end of the year for success to happen. You could do it sooner. And I feel like everything slows down at the end of the year. So it's just like, oh, this one's on vacation and this one's on
Yeah,
vacation,
for sure.
right? And everybody is like in holiday season. So it's always best to do it in the beginning of the year, and then really take it, take it off and take it slow. So as we mentioned here, if your income is more than 150K, then hire an accountant to do it for you. And I want to highlight accountant and not bookkeeper, because bookkeepers, again, they're great, amazing, beautiful people, but they don't really know the tax law, and all they're gonna do is categorize your expenses according to the IRS code. But they're not gonna help you and say, hey, your entity should be this, or your payroll should be this, or let me reduce your taxable liability. They're not going to do all the other things, or help you depreciate your car and give you ideas of how you can deduct your car, or hire your children or grandparents or parents and things like that. They really just do the bookkeeping, and it's like going to a pizza shop and just getting the bread. Like, you know what I mean? Like, you want everything else. You really
True.
want to, you really need everything else. And as a business owner, this is what you need. You need an accountant to help you with, I don't know who that is. Um, oops, I don't know. But you need an accountant to help you with your books, with your payroll, with your sales tax, with filing your returns. You really need an accountant to help you with everything from A to Z.
Yeah.
Awesome. Okay. Perfect. So expenses, let's go over that. Make sure you deduct every single expense possible, and you need to know what your tax deductions are. Super important. You really need to know your deductions because, again, if you know what your deductions are, you're able to reduce your taxable liability, and that's what everybody wants.
Mm-hmm.
Everybody wants that. So here are some common business expenses, as we mentioned. With somebody that just had the question. So here are some common expenses: coaching, telephone, internet, marketing services, accounting services are deductible, utilities, office rent. If you have a virtual office because you work from home and you want a professional, New York City or whatever address, like a city address, you're able to pay like $200 a month to get all your mail there. I highly recommend it. Payroll and paying your employees, contractors. If you have contractors, make sure you issue 1099s and review if you need to issue 1099s to them, because it really depends if they are a corporation or an LLC. It depends. Legal fees, any legal fees you are able to deduct, especially if it's related to, I mean, it has to be related to either opening a company or filing a partnership agreement, or creating an NDA for your employees. All of that is really deductible because it's necessary for your business to operate. And then the IRS,
Softwares.
exactly, I forgot about that. Yep. Softwares, that's right. Yep. Computer equipment that would need to be depreciated depending on how much it is. And there's so many business expenses that you can deduct as long as it's ordinary and necessary for your business. You are, able to reduce your income with these expenses.
I
So,
love when we say that because that's what the IRS says: ordinary and necessary.
right. Exactly. And like whatever is ordinary necessary for the business owner can be very different, or for like a model like that you mentioned will be very different for an accountant and a doctor. It
Mm-hmm.
is, it really depends on the occupation or profession that you're in,
Yep.
industry. And, and if you tell an accountant, I need to go here because I'm able to make more money, or I need to hire my kid because I need him to put stamps on Amazon boxes, or whatever it is, then it would be
Mm-hmm.
deductible because it's necessary for you to do your business. And, yeah, and that's why it's always best to have that conversation with your accountant. A lot of clients don't have, that conversations with their accountant. They just file the returns, email it to them.
They trust them. They trust
Right.
them. That's why. So you feel like they know exactly what they're talking about. And Sarah, you said that you noticed that a lot of people are not, the CPAs and bookkeepers that you're speaking to are not up to date on the new tax laws. I know that enrolled agents, EAs, which is what Rachel is, and which we have a few of at our firm, have to take courses to get their credits
Yeah,
each year so that they're up to speed with the tax laws. I don't know if that applies to CPAs, Rachel. It might. I'm
it
sure
does.
it does.
Mm-hmm.
Um, but bookkeepers don't have to do that. Bookkeepers are really administrative, and so they're doing QuickBooks work or whatever
Right.
bookkeeping platform they're using. But really, they're just kind of going in there to reconcile the statements
Right.
of your bank and credit cards. So it's a
Yep.
little different. But an accountant who's an enrolled agent or CPA does have to take courses each year and get a certain amount of credits to be able to keep their license.
Exactly.
So they should be well versed in the new law for each year.
Right. But I would also say like it really depends on what you're looking for. So if you're looking for a real estate accountant and you're looking for someone that can help you with cost segregation, or there's a tax strategy called conservation easement, not everybody really specializes in that. Or there's an R&D credit, or research and development credit, that, or there's so many different things because accounting is so broad. And
Mhm.
everybody, just like a medical facility, somebody could really focus on the eye, or the heart and the back, whatever.
Right.
The some accounts, like we try to focus on small businesses, and there are some specialties like e-com marketing agencies that we can work with, and we have an all-in-one offer to help business owners. You need to really go to an accountant that could help you. So not all accountants can focus on R&D credit, and
Hmm.
some, one or two accountants may, and that's all they do all day. So you want to make sure that you go to an accountant that you need, and that can service you.
I agree.
Yeah. So after you enter all of your expenses into the bookkeeping software, QuickBooks Online is what we recommend. We highly recommend for your accountant to review your P&L, your general ledger, all of your expenses, your balance sheet. Every single line item on the return has to be reviewed. And if there are additional questions, they would need to ask you. And once the books are in perfect shape, that's when you're able to prepare and finalize your returns. So you want to
Rachel,
follow.
but I
Sorry.
have a question. I'm sorry. No, I'm sorry. Um, when you give, let's say you go to, you have your bookkeeping done by someone, you go to your accountant and you say, can you please review the books? What exactly is that accountant going to be looking for? What are the key things? Do they need to read? How do they know that they're accurate?
Right. So we want to make sure that all the accounts are reconciled and the balance, matches with the bank account. So let's say your Chase balance has a $500 and in QuickBooks it's like $50,000. Like what? There's a huge discrepancy. Or we see a lot of negative like red balances, and just things don't look right. Or we see a lot of accounts are not reconciled, or a credit card. I've seen credit cards not reconciled until December 31st and it ends in June or July. And it's like, this is not complete. What am I reviewing here?
Right.
Or some credit cards are missing or have been replaced, or, let's say they're like Zoom accounts. Let's say Zoom could be allocated, 5 accounts could be allocated to advertising, and then the other 5 could be allocated to office communication or office and technologies. And there's so many inconsistencies that you're like, okay, the books here look like a mess, and we need to really either catch the books up, clean it up, make sure, when we look at the general ledger, what I do is I look at like January 1st till December 31st, and I filter it by like payee. So it's like all of Zoom. I want to make sure Zoom, and then we make sure that it's in the right account. All of payroll, does the payroll match to the W-2s? And I don't know if you know this, but let's say you pay somebody on a W-2 of $1,000. Their net check is going to be, let's say, $700, for example, right? And
Right.
what comes out of the bank is $700, but you need to gross up the payroll to make sure that it's 1,000. So
Hmm.
that's another discrepancy that we see. We need to make sure that the payroll journal entries and the adjustments are in the proper books, because if it isn't, then you're not deducting the proper amount. So that's another
Right.
discrepancy. Payroll taxes has to be accurate. It has to match the payroll returns, because if it doesn't, the IRS can verify it. There's just like so many things. 1099s, I've seen outside services, but then the 1099s don't match. And if you show outside services or commissions on the return and there are no 1099s to match it, you're begging the IRS for an audit. Like, where you're telling the IRS there should be 1099s, but there are no 1099s filed, there will be an audit. Or equipment, and you need to put it as depreciation. There's so many like ifs and buts, and it's all related to the tax law. Or let's say gift. So if I see a gift of, let's say, $500, I know something is wrong, because the maximum gift expense that you're able to deduct per person is $25. And how many gifts do you really give? And the IRS wants to see who you gave the gift to. So
That's so crazy.
right.
Just for $25?
It's the stupidest thing. So you have to do like 500 divided by 25. What is that? And then just like find out the names. Or let's say if it's a weird
20
number,
people. You have to
right?
put 20 people. Unreal.
Yeah. Or if
Wow.
it's like 526 or 28, like it just, if it's a weird number, then you start questioning it and it just doesn't make sense. So that's what we look at as accountants, from an accountant's eye. But and it also, like, if we see rent, we look for utilities. Or if we see, you made $200,000 of income, where is your rent? And Where's all your like we just ask questions, but bookkeepers, their focus is to classify their expenses, but not like 1099s. Okay, outside services, where are the 1099s? Payroll, where's the W2, W3s, and 941 forms? Like there's just every line has to be connected to something else,
Right.
and it has to make sense. So that's why it's super important for an accountant to review your books. Super important.
Got
Yeah.
it.
Okay, then so you want to file your returns by March 15th. Normally, and almost always, you don't pay anything with your S corp and partnership returns because it's a flow through entity. Whatever net income you have, it flows through to the individual return, and you pay the tax on the individual level. But some and most states have a minimum tax that you're required to pay. So whatever the minimum tax is, it could be $25 for New York State. And then as your income, your gross income, not your net, as your gross income gets higher, you would need to pay, $1,000 or 1,500, whatever it is, to the state. So you want to make sure that you have that minimum tax paid. Or if you don't pay it, then some states don't accept your extension. So it's
Right.
based on the amount that you pay them, and it's super important to make that payment timely. And if you know what you're gonna owe, just pay it now and file it now. It's never too early.
Right.
So as we mentioned here, if you need more time, you could file an extension, but never have an extension to pay. You only have an extension to file. File your corporate returns, then file your individual returns. Once you know the balances, make a payment plan if you need to. It's pretty simple to set up a payment plan. But again, if you have a virtual CFO service and if you're a client, we do that payment plan for you because we don't want you
Yep.
calling the IRS. And, we help you with everything from A to Z. And then if you need help with filing an extension, we could always help you. This is a jot form. But I also wants to mention, and I don't know, I forgot here, but once you file your corporate returns and then your individual returns, and a lot of times people are so upset that they had like a huge tax bill. So
Hmm.
that is when it's the perfect time to start tax planning. Like, what you made last year, you're probably going to make something similar this year. And what can you do to reduce their taxable income? And it's like, it really makes sense to start planning now so you have enough time to, hire your kids or do other things that you need to reduce your taxable income. And we have a tax planning option where we review your books on a quarterly basis and give you specific suggestions on what you could do to reduce your income and then help you implement it. Whether it's the Augusta rule or hiring the children, we review your books and you say,
Hmm.
hey, pay your kids this much, let's do it now, let's sign this lease agreement, or let's put money into an IRA because you're making so much money. It makes sense to do it on a quarterly basis versus just at the end of the year. And you're able to review your finances with a high level individual and go over your finances with a CFP. So it's super important to do that quarterly versus, like you mentioned, Mandolin, just doing it at the end of the year in November and December, and you're like, they're
Scrambling. You get nervous.
exactly.
They get nervous, literally.
Exactly. And you just don't want that. So nobody wants that. And everybody really wants to be ahead. I hate rushing. I hate it.
Me
I
too.
hate, you know what I mean? I hate it. I just want to take my sweet time. I love doing things intentionally and really focus 100%. I hate doing things last minute. And, planning ahead is my thing. We know the year is going to end. You know that you're going to owe a lot of money, and you don't want to do things in a rush, because when you do things in a rush, it's messy and you end up overpaying, and you just don't want that. And it's not 100% perfect. And I hate not doing things 100% perfect. So, doing things timely, slowly, intentionally is something that every business owner needs to do, because
Yeah.
you're making so much money, you're working so hard. Just do it right. That's it. So,
And then, this is, I feel like when it comes to taxes, people don't want to pay taxes, right? It's like, it's a thing. You don't
right.
want to have to do it. It sucks. Nobody likes it. But you don't want to be caught in a position where you're 3 years into a business, all of a sudden it explodes, it's doing extremely well, and
Yes.
you are behind. I
Right.
have seen this countless times before where people
Mhm.
put it off and put it off and put it off, and now they're in such a huge heap of trouble
Right.
where I've seen people's passports get revoked where they
Mhm.
can't travel outside of the country anymore.
'Cause they owe
Bank account that's
money.
Yes, because they're just so negligent that
Mhm.
your bank accounts could freeze. You can lose everything essentially just for not being on top of your financial side
Right.
of things, the taxes.
Mhm.
It's true,
It's really true.
unfortunately.
I've seen people, I think, get, like, rejected with immigration, because they haven't been, on time with their taxes.
Mhm.
Just if you know what you're gonna owe, then and being proactive will only help you save. If you're late, then the interest and penalties will only be higher. So the more that people wait, the more money you're gonna owe, and then
Yeah,
interest and penalties always accrue. So it's always best to do that timely. And then, oh, there you go, tax planning options. So yeah, I had it here actually. So review what you could do this year to reduce your taxable liability, be proactive, and the best time to start tax planning is now. And then, we can help you if you need the help. We have 3 goals in mind, obviously, for every single business owner, to make sure that you're able to save the most money in taxes legally, to make sure you're compliant with the IRS and state, and then reduce the risks of audit. Um, you know, and that's it. Take your time. Well, take your money back, but also time. Time is the number one thing that business owners wish they had more of, where they
hmm
could hire more people, and they could really have more time to spend time with their kids, their family, travel. Because sometimes the business really sucks you in. So if you're doing your own bookkeeping, delegate it. The more you delegate, the more free time you have, and the more money you can make.
true,
So
very true.
yeah. That's it. Any other questions that anybody has?
Let's see. Alrighty. Yeah, I think we're all good. Well, this was a good one. I think I love doing these webinars.
Me
I feel
too.
like we're giving so much gold to people and you guys, if you ever have any questions, if you ever want to run something by us just to see if it sounds right or looks right, I'm more than happy to get on a free consult with any person. I do it all day long. And you can do that by reaching out to support at empiretaxusa.com, and one of our admins will get back to you to book a call with me.
Mhm.
Um, and yeah, we look forward to hearing from some of you. Give us some feedback, leave comments. Rachel, anything?
Nope, that's it. I think you said it perfectly. Leave comments. Let us know what you want us to talk about in the next webinar, and we want to make sure that it's really timely sensitive, these webinars. So it's like, because March 15th is right around the corner, and
Yeah.
we'll come up with something in the next couple of weeks, and we'll market it everywhere, and we'll invite you to the next webinar, and we'll go from there.
Yay.
Yay!
Happy
Thank you.
tax season, guys.
Exactly. Happy tax season. 15 days. File your returns, file your extensions. And if you need anything, keep us posted.
Take care.
Bye, everyone. Bye.
Bye.